Sweatcoin is a Web2 app with move-to-earn mechanics. It was created in 2015. The way it works is basically you walk and usually you earn around 10 Sweatcoins a day. For them, you can either buy products or you can donate them to charities. In April 2022, Sweatconomy announced the launch of its own crypto token Sweat. It is going to be built on Near blockchain. The token generation event is happening on the 12th of September. So let's have a look at whether Sweatcoin is something interesting to look at by looking at its investors, tokenomics, and how you can earn the token itself. First of all, the game is free to start and you do not need to own any NFTs to start earning the tokens. You just download the app, walk, and you get the Sweatcoins for that. There is a cap of 10 Sweatcoins a day for 10,000 steps. There is also a premium inside the app, an optional subscription that allows you to earn more than 10 Sweatcoins per day for your walking. However, there are additional ways to earn the Sweatcoins, for example, with a referral link, by inviting the friends, or by watching the ads. There are free ads every day available for you to watch, and you can earn a certain amount for Sweatcoins for that. Additionally, they also make contests on Discord. So every week or so, or maybe every 2 weeks, there is some kind of contest going on. As I mentioned previously, the token generation event and basically the launch of the Sweat cryptocurrency is happening on the 12th of September. The number of Sweat coins that you have saved up until the 12th of September will generate you the same number of Sweat tokens at the token generation event. So let's say you download the app, you earn 100 Sweat coins throughout your time in there, and then on the 12th of September, you opted in to have your Sweat coins converted into the Sweat token. You're going to have, after that, 100 Sweat tokens and 100 Sweat coins left on your balance still. So it is a great deal. You just basically opt in to have that airdrop. So we have the Sweat coin and we also have the Sweat token, which is the thing built on blockchain. This is the one is going to be available on the exchanges and you can just use as normal cryptocurrency. It sounds like a great deal, but then knowing that the app was created in 2015, what if there is a person who didn't spend their Sweat coins on any of the products, on any of the charities? How many Sweat coins or Sweat tokens are going to have? So this poses a question of how high the inflation is going to be at the token generation event. But you have to remember that the app was created and tailored for the Web2 users, and people likely have been buying products actually and spending their Sweat coins before the event is going to happen. Out of the 100 million users, only 11.5 million have opted in to have their crypto wallet created. The team has also accounted for that, and they're making it more of a log drop rather than an airdrop. So only 10% of the tokens are going to be available and liquid at the token generation event, and the rest are going to be vested over 24 months. Additionally, the team has recently announced that they're going to burn 4 billion tokens at the token generation event, and they expect it to reduce the total token supply at the token generation event by 15%. If we divide the 4 billion tokens by 0.15, we get the total supply at the generation event at 26.7 billion. It makes you wonder how much the token is going to worth, if worth anything at all at the very beginning. However, you have to remember that only 10% is going to be unlocked. I made a small calculation based on this diagram over here and this table by the Sweat team about tokenomics. I calculated the total percentages unlocked at TGE. Then I also took the value that I derived from dividing the 4 billion by 15% to get the total token supply at TGE. So overall, I got 4.37 billion circulating at TGE. This sounds much better than the almost 27 billion. However, to put things into perspective, we can compare Sweat to GST from STEPN, because you earn both tokens from walking and running. If we go into CoinMarketCap, over here we can see that the total circulating supply for STEPN, for GST, not GMT, is 417 million. This is considerably smaller, yes, but then we have to adjust for the user base. And I looked up on Dune Analytics for the active user base, and the active users for STEPN are 31,000 basically. Total lifetime users are almost 1 million. So it is safe to say that for Sweat, with its 11.5 million wallets already created 1 month before the launch of the token, the active user base is going to be at least 10 times bigger. So the total circulating supply of Sweat at TGE seems more okay relative to the number of people using it. By the nature of the idea, you cannot have the total token supply capped at some point because people are walking and earning the crypto, and your idea is to make people walk. So it kind of would defeat the purpose if the total token supply was capped at some amount. But there is a way to make it more sustainable. Firstly, by making a limit to how many steps can be counted towards your crypto amount and not the sweat coins. So only your first 5,000 steps are going to be accounted for the crypto earnings. For every 1,000 steps, you're going to earn 1 sweat token, and this is only up to 5 sweat tokens a day. In a year, it's going to be 1/3 of a sweat token for 1,000 steps, then it's going to be 0.19 for 1,000 steps. And in 5 years, it's going to be only 0.06 for 1,000 steps, and it's just going to almost zero, however, never really approaching that. The second idea the team is going to implement to reduce the total circulating supply is by introducing the inactivity fee. Users who on a certain number of days do not meet the threshold for a certain number of steps are going to earn less sweat tokens, and they're going to allow the DAO to decide on how many steps that threshold is going to be. Thirdly, the users are going to be incentivized to hold the token by introducing staking and also by having higher rewards for the amount of tokens that you hold. The more you hold, the more rewards you can earn. And now let's get to the partners and investors. The partners are the ones who basically pay the Sweat economy to have their product listed inside the app, and the investors are the ones who invested recently. There has been an announcement of a closed 13 million funding round. The round was led by Spartan Capital with participation of Electric Capital and OKX Block Dream Ventures, Swissborg Ventures, GSR Ventures, and also other ones that are listed on here. Now let's have a look at the light paper. It is quite informative, but we are mostly going to focus on the roadmap. Since you are not buying any NFTs, Sweat needs to derive its value from somewhere, and in the tokenomics they explain exactly how they do it. First one that they say are NFTs. At the moment you cannot buy or sell any in the Sweatcoin app. They are introducing the opportunity for the third parties to sell their own NFTs in the Sweatcoin app, and for that they will have to pay a fee. And the users then will also have to pay a fee to upgrade any NFTs they have. I am really hoping that the NFTs are going to have some utility as well and not just be pretty pictures. Second one is DeFi functions. So because there is also going to be a Sweat wallet, you're just going to have the gas fees, this liquidity provision staking, and all of that. Access to audience and advertising are more or less the same thing. And yeah, they're self-explanatory. The companies will just have to pay in a Sweat token to promote any of the products. Then we have alternative movement validators. These are needed to make sure that the steps that you are making are from running or walking or doing some kind of physical activity and not just shaking your hand in the air. They are going to have to stake their Sweat tokens to be a movement validator. Data analytics. Because I do not read terms and conditions, I'm not sure how much of my data they have already sold, if any. Basically, in the future, you will have the opportunity to opt in to have your data used for institutions, investors, healthcare providers, and all that. You will get a fee for that, and they will have to pay in Sweat to gain the access to your data. And then we also have the premium subscription services. These are also self-explanatory. The users will have to pay in Sweat to get some kind of premium subscription. At the moment there is just one, but I'm sure that they're going to introduce more perks and more varieties. Of course, not all the functionalities and plans are going to be realized at the token generation event because it is happening already in a month. So around the same time, they are going to introduce you to the Sweat Wallet app and the staking and the rewards for staking, which are to make sure that the value of their token is not going to the floor. In Q4 of 2022, we are going to have Sweat NFTs, but again, those are not mandatory to participate. And then further functions and the inactivity fee. I was a little bit confused here because they mentioned that the inactivity fee is going to be determined by the DAO, and the DAO is only going to be introduced here afterwards. So this does not really tie well together. They introduced the NFT marketplace after the Sweat NFTs as well, so the Sweat NFTs must be sold on some third-party marketplaces. Moving on to 2025 and onwards, they're introducing more functions that they mentioned in the introduction to the tokenomics. However, all these phases from 2024 to 2025 and onwards, I would take with a pinch of salt because all the dates get postponed, especially in crypto. Even if you plan it really well, it does not go as planned, and the markets change so quickly. If you want to download the app, you can use my referral link in the description. It doesn't cost you anything to use my link, but I will earn 5 Sweatcoins. And if you have any questions, leave them in the comments. I would be glad to answer. Other than that, thanks for watching. See you in the next one.